Something huge just happened, and hardly anyone noticed. The United States quietly forced two of its biggest banks, JPMorgan and Bank of America, to walk away from a $5 billion Chinese IPO in Hong Kong. No press release, no public explanation, just a quiet, cold instruction: back out, no warnings, no room for negotiation, just one move, surgical and deliberate. And how did China respond? Not with angry speeches or press conferences, not even a single word, just silence. But within 72 hours, China made its move. It didn't involve missiles or sanctions, it involved money. $78.5 billion in U.S. Treasury bonds disappeared from China's books. Gone. This wasn't a typical trade spat, it wasn't tariffs or tweets. This was a silent financial earthquake, and it might have just rewritten the rules of global power. The spark behind all this? A Chinese company named CL Battery. On the surface, it looked like just another tech IPO, specializing in lithium-ion batteries, the kind that power everything from electric cars to military drones. But here's where it got messy. CL had reported ties to China's defense sector. That made Washington nervous. For U.S. intelligence, this wasn't just a battery company, it was a national security threat hiding in plain sight. Meanwhile, Wall Street saw a gold mine. Banks like JPMorgan were ready to cash in on one of the biggest IPOs of the year. But then, out of nowhere, the U.S. government stepped in. They didn't just block CL from listing in New York. They ordered American banks to pull out of the deal in Hong Kong, China's own financial backyard. That crossed a line. CL's valuation instantly dropped $210 million. But the real damage wasn't just to one company, it was to the global system itself. Because what the world saw was this: U.S. money no longer follows market logic, it follows geopolitics. And once trust is broken in finance, money starts to move in unpredictable and dangerous ways. China didn't hold a press conference. There were no threats, no press releases, just money quietly leaving the building. Within days, China's state-owned banks started offloading U.S. treasuries. Not in one loud move, but in precise, measured steps. Like a chess player sacrificing pawns to prepare a checkmate. By the end of the first quarter of 2025, $78.5 billion worth of U.S. government debt had disappeared from China's portfolio. That's the largest sell-off since 2016. And here's what makes it even more chilling. It wasn't done in panic. Barclays analysts called it a diversification strategy, a fancy way of saying China is quietly building an escape plan from the U.S. dollar system. To understand how serious this is, think of U.S. treasuries as the foundation of America's financial power. They're what give the dollar its global clout. So every bond China sells, it's like pulling bricks out of the dollar's foundation. One by one. Quietly, relentlessly. So where's all that money going? Not into more U.S. assets, that's for sure. Instead, China's drawing a brand new blueprint for global finance, one that doesn't rely on the U.S. dollar at all. Let's start with gold. Trading volume at the Shanghai Gold Exchange just hit a 5-year high. China isn't just buying gold, it's turning it into a reserve anchor, something solid, something no country can sanction. Then there's the Yuan. Once ignored in global finance, now it's being used in massive international deals. Just look at Saudi Arabia. They issued a $4 billion bond denominated in Yuan, and guess what? It was 4 times oversubscribed. That means there was way more demand than supply. Investors around the world wanted in. Why? Because they see what's coming. And don't forget the infrastructure play. China's long game. Through projects like the Belt and Road Initiative and BRICS plus development banks, they're offering funding outside of Western systems. Even more quietly, the BRICS payment system, an alternative to SWIFT, has seen a 320% surge in transactions. That's huge. It's like building a shadow internet for money, away from U.S. surveillance. This isn't just about China anymore. It's a financial lifeline for every country tired of U.S. sanctions and dollar dependency. Now, Washington is making a bold and risky move. A new bipartisan bill is gaining steam, and it could force American investors to dump over $812 billion worth of Chinese stocks and bonds. That includes heavyweights like BlackRock and Goldman Sachs. These aren't fringe funds. These are titans of Wall Street. Under the proposed law, 220 Chinese companies would be labeled as strategic threats. Translation? They'd be blacklisted for U.S. investment, regardless of performance, regardless of demand. This isn't just regulation. It's a forced divorce, and it's making everyone choose sides. Profits or patriotism? Sounds dramatic, but that's what's at stake. If passed, the bill would give U.S. investors just 12 months to pull out. But here's the real question. What happens after Wall Street retreats? Who steps in to fill the void? Spoiler alert, Shanghai is already preparing. Stock exchanges are being upgraded. Capital flows are being rerouted. It's like Wall Street left the party, and Asia is building its own. This isn't a forecast. It's already happening. Dozens of Chinese companies are delisting themselves from Wall Street, and not because they're failing or unprofitable. In fact, many are thriving. But they're choosing to leave voluntarily. Why? Because they sense the storm coming. The risk of U.S. regulatory crackdowns, surprise delisting threats, and rising political interference has made staying in New York feel like walking a tightrope in a windstorm. They're not waiting to be pushed. They're walking out the door. And here's where things get even more serious. This trend is spreading beyond China. Southeast Asian firms, from Indonesia's fast-growing tech sector to Singapore's major logistics players, are bypassing NASDAQ and the NYSE altogether. Instead, they're heading to Shanghai's International Board, a platform quietly rising in global status. In just a few years, Shanghai has racked up $112 billion in foreign listings, a staggering figure that would have been unthinkable a decade ago. It's as if the financial world is building a second Wall Street, but this time, it's planted firmly in Asia. And the shift isn't limited to stock exchanges. Big names like Moody's and Fitch Ratings, the traditional watchdogs of global credit, are being replaced. China is promoting its own rating agencies, ones that align with its interests, not Washington's. It's like a country setting up its own GPS system because it no longer trusts the signals coming from someone else's satellite. The bottom line? For decades, U.S. financial dominance relied on being open, stable, and reliable. But by weaponizing the financial system, using it to punish rivals, the U.S. is now seen as unpredictable, and money doesn't like unpredictability. So, capital is moving to where it feels safer, where the rules don't change overnight, where investors don't wake up to headlines that their assets might be frozen or banned. This exodus isn't loud or dramatic. There are no fiery speeches or big announcements, but it's happening quietly, firm by firm, listing by listing. And each move away from Wall Street is a vote against the U.S. system. Each exit is also a step towards something new, a system that's not controlled by Washington, a system that's being quietly assembled in the East. And that brings us to the bigger question, the one that shakes the very foundation of global finance. What happens if the world no longer needs the U.S. dollar? The U.S. dollar has been the undisputed king of global finance for nearly a century. It's the currency used to buy oil. It's the standard for international trade. Central banks around the world keep their reserves in it, almost like countries buying financial insurance in dollar form. But today, that throne is starting to wobble. Let's look at the data. In 2000, the dollar made up around 71% of global foreign currency reserves. Today, just 57.4%, a 28-year low. That's not a blip, that's a trend. And it's speeding up. So what's taking its place? Not one currency, but many. The Chinese Yuan is rising in Asia and Africa. The euro still holds sway in Europe. Gold is making a comeback as a trusted hedge. And then there's BRICS Plus, an alliance now representing 43% of global GDP. When nearly half the world's economy is exploring alternatives to the dollar, the writing is on the wall. This isn't about destroying the U.S. economy or crashing Wall Street. That's not what China or BRICS Plus want. In fact, many of these countries still trade with the U.S. and hold American assets. But they're building something new, so they have options. Think of it like this. For decades, the U.S. was like the only airport in town. If you wanted to fly internationally, you had no choice but to go through it. Now, other airports are opening up. Faster, cheaper, with fewer delays and no TSA-style rules. The global economy is no longer locked into one route. Every time a country dumps U.S. treasuries or issues a bond in yuan or completes a trade in rupees or reals, it's like building a new runway, a path that doesn't need the dollar to take off. This doesn't mean the dollar will disappear overnight. It still has deep trust, powerful institutions behind it, and a massive economy supporting it. But here's the key difference. It's no longer essential. And once something stops being essential in global finance, it starts being optional. And optional things, eventually, some people choose to opt out. That's the quiet endgame we're watching unfold. So what are we really looking at here? Is this a financial Cold War? A silent standoff where money replaces missiles? Or is this just the new normal? A world where no one power calls the shots anymore? One thing is clear, the era of American financial dominance isn't ending with a bang. There's no crash, no televised summit, no dramatic treaty. It's ending with something quieter, a spreadsheet. A quiet shift in portfolios, a bond sale here, a Yuan payment there, a company delisting, a new platform being tested in Brazil or India. The rules are being rewritten, not in speeches but in transactions. And the next big move, it won't come from a press conference. It'll come from a line of code. A payment settled in digital Yuan. A country choosing BRICS over the IMF. A Wall Street titan suddenly pivoting to Asia. You won't hear it coming, but you'll feel the impact. If you've made it this far, you now know more than most about this seismic shift. So, what's your take? Is the US really losing its grip, or is it adapting to a multipolar world? Drop your thoughts in the comments below. I read everyone. And if you want to keep tracking this financial evolution, if you want to understand how the next 10 years of global power will be shaped, hit that subscribe button, because the next move could come tomorrow. And when it does, you'll want to know exactly what it means.